Welcome back to the table for the Friday, February 7, 2025 installment of Market Plus. Ted Seifried's with us. Ted, hi.
Hi, Paul.
I always appreciate your willingness to go with pretty much anything I ask. I don't know if I've ever said that publicly, and I thank you.
Oh, it's fun.
I also want to do a little plug. You're going to join us for a 50th season tour event in LeClaire, Iowa in June.
Okay.
So I'll ask you all sorts of crazy questions then, too.
All right.
We'll also take viewers. You can sign up now. We have more information about that in our market newsletter. But Ted, let's start about markets.
Yeah.
Should we talk about those first? Let's start with wheat. KB in Manitoba wants to know, did you, Ted, bring your corn hat ahead of next week's WASDE report? And does he ever consider wearing a mini wheat hat? Mini capitalized there, you can see on screen.
Minneapolis wheat.
Minneapolis wheat,
Right,
correct.
yes. Well, first of all, I'm very disappointed with myself for not bringing the corn hat. I intended to, and I left it in my office. And then when it came time to make the drive here, I realized that I didn't have it, and I didn't have time to go back to the office because I was really intending to wear. I feel like this is the right time to wear the corn hat, except for I'm also slightly concerned that if I were to wear the corn hat, I would jinx the market. So maybe it worked out. Then the second part. What does a Minneapolis wheat hat look like? I'm very interested.
That was a good exchange that you did there on that.
Yeah, I mean, I searched on Google and Amazon for a Minneapolis wheat hat. There was a Wheaties hat, which I think is interesting. Mini frosted wheats is a good one, but I couldn't find a hat. But yeah, for years I've been looking for a soybean hat. The closest thing I can come up with is an Ohio State Buckeyes, which I'm not a fan of Ohio State necessarily. And a Buckeye doesn't look that much like a soybean, but it's the closest thing I've been able to find. And then I can't really find anything for wheat. So it's the corn, that's what we got. But it's also, a lot of fun to wear, so.
Hypothetically speaking, if all those hats were perfect in the way they wanted them to be, which hat would you wear?
Way to rein it in. Which hat would I wear right now? Like I said, I'm kind of excited about the wheat chart. But I want to give corn credit for what it's done since the 26th of August and what the corn balance sheet has done since the Outlook Forum numbers in February. I mean, there's a lot of reasons to feel like corn has really pulled itself out of the abyss over the course of the last calendar year, really. And so, I don't know. I'd say for the here and now, for the achievements that have been, the corn. For what could be to come, I don't know. Like I said, I'm very intrigued by the wheat chart.
We have, I have Mike's question about corn, but I want to skip that one and go to Eric instead because Eric, the easy question, you can fold in Mike's question to your answer to this one about the top. But Eric's question is very specific. With the backdrop of La Nina forecast for the 25 Corn Belt growing season, along with drought, subsoil maps, very unfriendly, how much higher will corn and beans need to trade to cover the 25 crop risk?
Okay, so you're asking about two different crops, and I think there's two different answers because.
So let's start with corn first, then.
Yeah, so corn right now, they've had delays in planting the second season corn crop, specifically in Mato Grosso. Mato Grosso produces about 50% of the safrinnic second season corn crop, and that second season corn crop is what we call their export crop, which is 70% of their overall production. It's very important, right? And as of a week ago, they were only 6% planted as compared to usually around 19% planted. They did catch up quite a bit. They're, I think, 23% now as opposed to somewhere in the low 30s. So they're still not back to average, but this past week was a big catch-up week for them. But because it's going in late, it pushes that safrinnic second season corn crop into grain fill during what starts to become their hot and dry season. So there's risk in that, which means I do think we have to keep a weather premium in the corn market for now for the second season corn crop. Then we're going to look at acres. Can we get the acres planted? We might need weather premium for that if we're having our own harvest, or if we're having our own planting delays. But then longer term, looking into the summer, so there's a lot of weather reasons why I think there should be a little bit of nervousness around corn. And anytime you have nervousness about production, that keeps some footing under the market. Now, all of that being said, you also have funds about as long as they've ever been for this time of year in corn. And if something causes them to run for the doors, and that could be something that has absolutely nothing to do with weather or corn fundamentals, well, then you could take that weather support or weather premium and say, there it goes, right? So Look, there are significant risks to the downside anytime you have a very large fund speculative position in the market and you have a lot going on geopolitically and just a whole lot going on from a headline perspective. So there's a lot of risk in corn. I think you do need to be looking at protecting downside, things like that. But also weather makes me feel like there's more footing under corn than there is for, say, soybeans, because soybeans, we're done with the Brazilian crop. And yes, harvest delays. That's short-term bullish because of the lag time it takes them to get product to port and to fulfill the orders that are already on the books. Maybe that means more export business for us, although we haven't seen it. The last 2 weeks of export sales for soybeans have been very disappointing. But these rains that you're getting at the end of the season, I don't see them as being damaging rains for their soybean crop. If anything, keep in mind, those soybeans got planted 1 to 3 weeks later. I think they could have been adding bushels. I think we're going to be shocked at what, the world is going to be shocked at what that Brazilian bean crop ends up being. So I have a hard time being terribly bullish for beans because the global carryover has gone from 100 million metric tons to basically 130 million metric tons. It's a massive increase. We're swimming in beans. We don't need a weather premium in beans.
Which highlights what you said in the show about where you should be in selling some of this 25 crop,
yes.
Your U.S., right?
Yeah, so soybeans, I said 20 to 35%. For corn, I'm a lot more of 15 to 20, 25%, right? I think beans are the ones that you want to more aggressively sell. In my mind, the only thing that can really save beans would be China appeasing us and living up to the phase 1 trade deal and buying soybeans just to buy soybeans. And I will say that after this last year, harvesting as dry as we did, the current old crop soybeans that we have really good storability. So, you know, okay, maybe. I certainly can't write that off and say it's not possible. But in my mind, China coming in and buying an additional 15 to 20 million metric tons, something big like that, is really the only thing that's going to change the overall soybean fundamentals, even if we do have some minor weather concerns. Certainly if we go back into a 2012 type drought, okay, completely different story. But, you know, we don't have to have a perfect soybean crop on big acres because there's a lot of soybeans in the world, Paul.
And we've done a really good job of growing beans in very dry conditions the last 2 years.
Yeah.
Which is also, I think you and I have talked about several times. All right, let's talk about fertilizer prices if we could, Mr. Seifried. Bradley in Nebraska, a lot of specific questions here, so let's do overall. How much higher can fertilizer prices climb? He's asking about, are there potential tariffs with Canada already factoring in a potash? What about urea's issue? What about phosphorus? Any of those stand out to you?
Yeah, you know, as far as the potential tariffs, are they fully factored in? No. Is the possibility of tariffs factored in? Yes. There's a difference, right? Because, you know, tariffs were going in place and then they got delayed for a month. So I don't think the market's fully priced in what happens if that does go into place. I do think there is more upside potential there. I think prices could go higher if that happens. I'm hoping that's not going to be the case, though. I really am. Either way, I do think input costs, I mean, we're getting down to the nitty-gritty. I mean, we're running out of time to wait. I don't see any near-term major downside potential. I hope I'm wrong, but I just don't see that happening.
I have one last thing, and I probably should have asked this before, so my apologies. We're going to go back a tiny bit. Gary in Wisconsin. Could late planting safrinha corn planting affect, this is why I'm going back to it, affect crop insurance prices? If so, how would it affect both insurance and then corn acres?
Yeah, no, that's a great question, and it's a fun question. And it's, the answer is absolutely yes. I mean, we're already into the month of February. The February average price is what we're going to, I mean, that's what we're going to go off of, right? So at least the start to February has been good. If there are more delays coming for this safrinha corn crop, I'd say there should be more strength in the corn market, and that's just going to improve that average price. The thing that happened at the end of the week, though, was, hey, the realization that more progress was made last week than I think we were originally expecting, and B, the 2-week forecast in Mato Grosso looks maybe not wide open, but pretty conducive to them catching up. Either way, as we were talking about, you know, keeping a weather premium in the market because of the later planting corn and because of the risk that it has at the end of the year, that's gonna, or end of their growing season, that's just gonna, as long as there's no major fund exodus, that's going to keep corn prices, I'm going to say, relatively elevated through the month of February. And ultimately, yes, I do think that could equate to a halfway decent, or better than what we were thinking a month or 2 or 3 or 4 ago, right? It could equate to a halfway decent insurance price. And that could encourage some last-minute acres. Beans, however, rallied $1 in the last month and a half or so. Beans have given us a little bit more of a reason to consider them, even though the cost of production and where the board price and where cash prices are trading right now. I mean, look, we're looking at negative margins pretty much everywhere. So I'm not 100% sure we're going to see a huge increase on principal acreage, like I've heard some people talk about. I don't think they'll be down a whole lot either, but I don't know. You know, I think everything that's happening right now is encouraging us to plant pretty much what we were expecting to plant in the fall. I don't see major changes. But yes, corn, if there was a small winner, or if somebody was taking the lead a little bit more so than where it was in, say, October, I think corn is winning that, but only slightly.
All right. You're not slight at all. You're a big time deal, Ted. I appreciate it. Good to see you, Ted.
Thanks, Paul. Good to see you too, buddy.
I was trying to get somehow of a transition out of there. Sometimes it's easier than that. It's easy that you join us. I do want to remind you, it's very easy to sign up for the Market to Market Insider Newsletter. It's free. Sign up at markettomarket.org. I want to let you know that next week we are going to talk about new farmers, how they are getting some insight on navigating the business of producing food. And we will also have the analysis of Chris Robinson. He'll be here to talk the markets. Thanks for joining us. Have a great week.